Sorry about your mama.
Hey, welcome everyone to the Mobile Mailbox Money Mastermind. Today is August 7th here on Thursday, sunny Arizona. We got our partners here from Florida. Go do this weekly, actually, 12 o'clock Arizona time. So providing unfiltered value to capital investors wanting to participate outside the stock market in collateralized lending opportunities, providing investors a double-digit return in stability and collateral, performing collateral at that. Today we have our partners here. We prefaced on residential lien positioning and our marketing. And if you've followed our channel for the past 2 years, most of our contracts and notes that we've procured out in the market are personal property transactions. So people do business with the individuals they know, like, and trust, and that's why we do these Thursday meetings to introduce the new opportunities that we have with our new partners in residential lien positioning and provide you to start cash flowing and stacking cash flowing assets in a time when it's needed most. For all you watching today, this is recorded, so we put it out weekly. You can go back and check out the other data, the information, the deals we've done. Just this morning, actually, we paid off an investor $65,000 where he received $500 a month in a passive lending opportunity with qualified operators seen here today with our group at Mobile Mailbox Money. So Todd and Jason, we sent out the residential lien position opportunities that we have, and we're excited to talk about these fresh off the press and actually not seen out in the market currently on deals that are in back office. So long story short, this provides you a look and in the back door of what we have to offer. Todd, Jason, appreciate you being on the channel today.
All right, Alden. Hey, we're excited to be here and excited to be a part of the team. Man, we've got a lot of things going in Florida, just like you guys do in Arizona. And one thing that I'm really excited about is these opportunities where we can pick up not only the manufactured homes, but we own the land underneath. Now, Jason and I, we've been in the business for the past 25 plus years, and our primary focus has been single family houses or mobile homes on land. But we're getting some really great leads on a daily basis here in Florida in some niche opportunities. And I want to talk about a handful that I have on the table right now. I'm out this afternoon putting these deals under contract. So this one opportunity is basically a 55 plus community. We're talking 5 minutes from the ocean. And what I like about this opportunity is that you can have manufactured homes as well as RVs. So the land by itself rents for about $1,000 a month. With the mobile home on the property, they rent for about $1,500 to $2,000. And this is a very desirable market, very desirable area for retirees that want to enjoy the sun and play. There's lots of amenities in the park. But we can basically buy these properties for the land value, and we're looking for investors who can come on board within 1 year and beyond to pick up these notes and hold them long term. But it has all the amenities we generally go for, Alden. We're talking pickleball. We've got a shuffleboard. Jason, what are some other things?
Pools. There's the big gigantic retirement center where they do their pool tables and dances and bingo and all that.
Yeah. So what's nice about this opportunity, I will say this, Florida, you guys know we do get storms from time to time, but that doesn't scare people like Jason and I or all the retirees that live down here. We love the sun and sunshine. People are continually moving to the state of Florida. So, but what's nice about this opportunity is that on this one particular deal, we can put RVs or mobile home a manufactured home on the land. We have options and we are not limited. So it opens up a lot more opportunity. And for investors, Alden, maybe you could talk to this a little bit more, but they're in a first lien position on the asset, the land, the mobile home that's there. I mean, it's a tremendous opportunity for any note buyer out there.
So it's a first lien. Let's talk turkey here. It's a first lien on 2 different lots, right?
So this particular deal we're talking about, we're buying it as a package. So right now, it is 2 lots with 1 manufactured home on the lot. What we're going to do as soon as we acquire it, we're going to split it and just have 2 lots. One is going to be an RV lot and the other is going to be the manufactured home lot. So we'll have 2 separate deals here that will create that we can own or finance to the 55 plus community. We can rent. Airbnb is a tremendous opportunity in this market. Like I said, you're 5 minutes from the ocean, and it is absolutely 100% full during peak season. And you've got a lot of demand even out of peak season where people want long-term rentals or to own a home of their own in this area.
So long story short, we're looking for a passive lender on first lien, first lien on each individual lot. And what's the balance of what we're looking for on each lot?
So yeah, basically the total purchase price on the 2 is 110,000, and we're allocating a small light cleanup. I mean, it's really rent ready as is, but we're talking 5 to 10 grand in repairs. There's like a one of the bathrooms has a, what do you call it, a window on the ceiling. What's gee, that slips my mind. The moon skylight. There we go. Skylight. It's got a skylight that has some needs to be replaced. So it's mainly minor cosmetic repairs. So we're talking $120,000, $60,000 per note. Would be ideal on these 2 properties.
And that's paying $500 a month. So you could start cash flowing in as little as 30 days with a first lien position and making $500 a month with the potential of a 1-year annualized liquidity auction or long-term stability. So you have annualized liquidity. You have the potential to continue on an auto rollover as we have a multifaceted exit strategy with rental, owner-fi, add the other unit for additional rental income, kind of diverse within that program.
What we're talking about here, it sounds like that we're looking at $60,000 per lot. We would make the assumption, and Todd and Jason, chime in. What's the current value of the one with the actual manufactured home on it? Is it a single wide or double wide? I'm assuming it's single wide, right?
It is a single wide, and we are seeing similar sales just for the manufactured home, 150, 169. We've seen that is a mobile home with the land.
Okay.
And in this case, we're getting the whole package for 110.
Okay, so the value of the current, say, lot 1 right now is probably about 130, and it could be worth up to 150 rehabbed. So that's our value relative to the 60,000. So we're looking at about 50% loan to value on lot 1, but it's a package deal to get the additional 60,000. We're really looking for the 120, and we make the assumption that the second land, once we put a property on it, be the same. We just have to put a manufactured or an RV on top of it and come up with an estimated value of what that would be and what that cost would be to bring that in.
And to be clear, that's 500.
Can I have my question now?
Yeah, sorry, just let me finish here. To be clear, that was 500 per lot. So the investor gets $1,000 a month with 2 first liens on each lot. Anyway, go ahead, Sonny.
My question was, how many beds and baths in the manufactured house that's standing currently, and how does that compare to what is the average rental rate in the area?
So it depends peak season versus off peak season. So peak season for this home, it's actually set up as a 1 bedroom, 1 bath with an added sunroom, which is massive, which could be utilized as a second bedroom or a guest room. So that is rents, like I said, peak season 15 to 2,000 per month. And so if we're owner financing it, we're going to be in that range for a potential buyer, which we've got a lot of interested people. This other one that we just acquired, guys, we're not even advertising, and we're getting drive-bys every other day and inquiring to get access to buy the property. So that's a great thing in this particular neighborhood. We've got high demand for owner finance buyers. We've got high demand for seasonal rentals as well as long-term renters. So we've got a lot of flexibility with this particular deal. As far as rents, if it's peak season, we're looking 1,500 to 2,000 range is what it's typically going for. If we're talking year-round, long-term, it's going to be more like $1,300 to $1,400 per month, Sonny.
So that's our strategy.
How many of the months out of the year? Go ahead, Alden.
I was going to say that's our strategy as the investor. So that's the exit strategy, facilitating the stability for the bank. Oh, we're not using a bank on this transaction? Yeah, that's right. That means you're the bank that's actually watching here today. So you step into a lending opportunity with first lien, making $1,000 a month with a qualified operator and multiple exit strategies where you don't have to do any of this. We take care of literally everything with our national network of contractors and niche market expertise in seller finance, in creative finance, in long-term rental strategies, and all the above. So just wanted to preface that. Go ahead, Sonny.
I was just going to ask you how many months of the year are you considering peak season? So if I'm trying to figure out an average of what you'd be gaining rental wise, those answers to thinking.
Peak season, we're talking October to April would be peak for this area. And hey, I do want to say this too, as because I think this is an awesome niche, guys, because here's the thing. Jason and I, joining the team, we've been flipping houses for many years. We flipped over 1,000 properties as far as a flip, and we have tons of opportunities coming to us on a daily basis. We get exposure to the best deals throughout the state of Florida. And what I like about this, Alden and James, is that we see a lot of elderly people that are looking to simplify life. They're downsizing. They don't want a massive house. That's why we've got the big tiny house boom. People are looking to simplify and get rid of the non-essential things in their life and enjoy life. And that's exactly the opportunity or the niche in this case. And like James said, we're buying at a fraction of what you're seeing retail, which is huge. There's a ton of equity to protect our note investors who are teaming up and really joining forces on these awesome deals that are coming to us each and every day.
So deeply discounted and in affordable housing. Did you know affordable housing is a state of emergency across the nation? Wow,
Absolutely.
what better place to hedge your bets right now? Ultimately to facilitate a solution to the problem.
I think the big issue that we want to look at what the investor's perspective is. Number one, we have value. We have lien position. So the opportunity is there for a multi-year income strategy. There's three different real big approaches in regards to it. The investor is in it at probably 50 to 60% of value. They're getting a probably through an attorney firm or title company. So they're getting their lien position. So it's free and clear. Right now, we're only doing one investor per lien on the property. The investor lastly has the right to be able to roll over, because I think ultimately deals like this, we're going to go into a multi-year, whether it's a 10-year investment strategy or 20-year, and the investor has the right, they can capitalize by rolling right along with us the capital that they have associated with the property, with their maintaining their lien position and monthly payment. And as Alden mentioned, I think it was $500 per month per specific at $60,000 on 10% is about $500 a month that they're making a positive cash flow income backed by probably about 60% of market value of the deal in case something goes wrong. So that's a win. That's a great win situation.
With
That's a win.
Trying to
That's a
preempt the
win-win,
question.
James.
Where
I'm trying to preempt the questions that the investors are going to ask me when I pitch this. You know, and Rodney Madison happens to be on today. Welcome, Rodney. Is a investor that I work with on a regular basis, and I'm just wondering, from the investor standpoint, what kind of questions would you have on something that you just listened to? Are you with us, Rodney? Maybe not.
I'm here. Sorry. Couldn't find the right button.
All right.
Hit. No questions right now. Just soaking it all in.
You know, these are new opportunities, and you guys are going to have more questions as we delve into these regular, regular availability. This is kind of new for a lot of our investors. They are traditional note investors, like Rodney, I think, took a formal education through the Note Investor University. So for them, these are probably going to hit more of their check boxes than in manufactured housing. So for them to trust us and our processes on our regular business, kind of better translates over to now our current new collateral we're offering, for them to hit their due diligence check boxes and all of that. So, Rodney, appreciate you being here today, by the way.
Thank you. Thank you.
So that's $100,000 position on 2 loans that we have currently immediately available. We're seeking immediate capital investment, wire ready opportunities. We could get you earning in little as a 30-day program and send you contracts today. Possibly, give it some patience if it doesn't come today, but we're happy to send out immediate correspondence in order for you to stop sitting on money in your account. If you have $100,000 in your money market account because you're unsure and you're worried about Jerome Powell not reducing interest rates, there's people on the sideline that are currently have huge money, in 3% earning accounts. This is your opportunity. So that's the 2 that we have. First lien as a 1-year annualized potential liquidity. I think we have a couple other opportunities today. Maybe we kind of shift gears or go to the next one here.
Yeah, I mean, you're talking about wanting, folks wanting to be secured with traditional real estate. And in your buy box, a lot of your folks are used to spending 30 to 50, 60 grand. What we think might be a really good alternative for them are second positions on high equity single family houses. And we got 2 last night in that we're going to talk about here. Do you want me to share my screen to show pictures?
Yeah, that would. Go ahead.
All right, so this one, again, we're showing addresses. I don't know if we'll do that or not, but this is we get one of these a day, it seems like, where this person, this is what we would call a bailout loan. The property, as you can see right there, is worth about $240. Now, this one needs a little bit of work, but it's not going to be a sale. It's going to be a bailout situation where they owe $65,000 on the first mortgage. The property's worth $242. They have $30,000 in credit card debt, a really high interest credit card debt, 29-30%, and they're paying about $1,500 a month just in credit card, just to pay the interest in credit cards. And so these folks are in for pre-foreclosure. They're actually in working with the bank right now to get it out of the foreclosure status, I guess. They've got a really low interest rate of like 3.5%. So it doesn't make sense for them to pay this off, but they have so much equity in this house that we're willing to come in and offer them, in this case, probably $40,000, help them get their credit cards paid off. They can use that money to not only pay down the first, but pay the second. They're interest only, 3-year notes. Again, very good returns for the end funding partner. But in this case, you're talking about a loan to value after the $40,000 of about 42%. This lady, she's got a great job. She makes about 150 a year, so income isn't an issue. They had an event driven issue that threw them off track a little bit, but they're back on track. Clearly got a ton of income. Going to help them drop that interest rate on their credit cards dramatically so that they can use the same money to get it paid off. This is their forever home. So the goal here is that they don't want to move. So in this 3-year scenario, their goal is to either get it paid off or fix their credit in a situation where they can just refinance it or do a traditional HELOC. And by paying off their credit cards in one big batch, their credit score is going to jump dramatically and put them in a much better position to get a traditional loan where they can pay off the equity loan that we give them and get to keep their house. So this is built in 1975. You can see a picture of it right there. It's a 3-2, just shy of 1,100 square feet. No HOA. They obviously own the land, and you're secured by a ton of equity. And in these scenarios or these cases, the goal is that they if they're going to lose the house, they want to get their equity. Right. So we're not doing the equity stripping thing that you're seeing out there in the marketplace right now. What we're doing is we're giving them a loan to help them get back on their feet. And we explained to them in the beginning, if you cannot make this payment, do not put us or anybody else in a position where you lose the house. So let's say they start missing the first payment on the mortgage. We're going to step in, we're going to start making that payment, and we're going to help them prep to get this house sold so that everybody is covered and paid off. And especially because we're in it at about 43% LTV with the second loan, there's a ton of security. This is in Florida in a really good market. So helping somebody, but also being able to earn a great return is definitely what we're all about.
So what's the called?
Sorry?
What's the capital amount we're seeking? Is that
the capital amount we're seeking is $40,000 on the second. She owes $65,000 on the first.
Hey, and Jason, one thing to note, we do see these on a daily basis, guys, that we're getting access to. And typically speaking, the range is going to be 25 to a max of about $55,000 is generally the case on these properties for the second loan bailouts.
And
So 40,000 for 3 years, and what percentage does it pay?
So just want to be careful here about how we're quoting returns out on the market. Just so 40,000 on a second lien position. Currently, how we're structuring it for the passive lender here watching today is through hypothecation. Do you know what hypothecation means? Hypothecation means to pledge an asset in order to garnish capital investment. That means you get a lien position, right? Your security with a qualified operator at $40,000. This is a second, just so we're all clear. And that is for an annualized rate for a low term, as low as 1 year, at a monthly payment of $333.33. So for $40,000, you become a passive lender with a qualified operator through hypothecation, and you get your lien position. We originate the note at 18%, so we have skin in the game and participate together in a collateralized lending opportunity. Why? Because we don't want you to just originate a position on a second that you don't know the homeowner or the situation. Whereas here, we're obviously, Jason just described a situation where we've already had conversation with this homeowner and provide some potential risk mitigation in the event of non-performance. So that's $40,000 for a term as low as 1 year at $333.33, $333. Yeah, I got the lucky numbers out here today. But that's through hypothecation. You could do a 3-year term. Why? Because we originate this loan at a 3-year term, and on $40,000 on a 3-year term, just grab out my little calculator here, is $400 a month. So, you know, to have the income-oriented investment strategy and start stacking $300 a month payments, you know, with a qualified operator, and below 50% loan to value with the new debt. Wow. To me, that seems like a freaking home run. You know, to be able to enter into case unique situations like that. And on top of that, you know what the icing on the cake is? That's a 3% mortgage. So that's just huge to walk into. So, Jason, any other color to add to this product here we have?
No, I think you covered it. I mean, it's from the standpoint of leverage and collateral. You know, this is a seller that we have talked to with these type of loans. We are on the phone with them sometimes for hours, working through the process of what happens if. Because they're scared to death. You know, what happens if I can't make my payment? Well, in all of these instances, typically we're looking at 50% LTV. These folks don't want to walk away and get nothing. So they are motivated in this scenario to work with us to help them get the property fixed up if we need to and get it sold so that they keep some of their equity. And that's in this case, and the one that I'm going to explain next, it's the exact same scenario.
Boom. Let's jump into the next one here.
All right. So the next one is in Ocala, Florida. It's this one. It's actually it's listed right now for $230,000. And this young lady, she just didn't realize she's sitting it on a gold mine and doesn't understand it. She owes about $51,000 on this property right now. She just renovated it. This was the first home she moved into. They renovated, they spent a lot of money renovating. It's in great condition. She feels like she has to sell it because she's got another property, which also has a lot of equity in it. And she reached out to us and just said, what can I do? She's in the same situation where she needs an equity loan because she's got some really high interest rates on her credit cards that she used to fix up the house. But she only owes $51,000 on this house outside of the credit cards. So what we told her that she needed to do was set herself up to be a real estate investor for the next 10 or 15 years. And basically use this property to jumpstart her investing career. Separate the house that she lives in, which also has a lot of equity. But in this case, if we lend her $40,000, it's the same, basically the exact same thing as the other house. She's going to use that money to pay off her credit cards. It's going to explode. Her credit will explode higher because she won't be using, all of her credit at one time. It'll also create about $1,500 a month in additional income that she's not spending right now on those credit cards. She can take that money and use part of that money to pay off this second mortgage, but she wants to be a real estate investor. Once she gets those credit cards paid off, she is going to be able to go borrow from a traditional bank. She's going to be able to go borrow money off this house, or maybe even come to us where we partner with her and buy the next property. And she's in a position right now. She's like, I just need to sell it. I need to get out from underneath it. She's making 2 payments, and it's one of those scenarios where you're on the phone with somebody and you just change their life, and they're kind of understanding now, like, that is crazy. Why would I sell this house? Another first mortgage in the 3% range. And the first thing that she said to us was, I got a 3.2% mortgage. And I said, you're crazy if you sell this house. You need to keep this house and leverage it to build your real estate, business. So a lot of the same math as the first one. She only owes 51,000 on this one though. She needs 40 grand to pay off her credit cards. Loan to value, she's got it listed for 230. I think I've got the value at about 215 from an ARV standpoint. We're a little bit more conservative than everybody else. If you have to sell it, needs no work. It's been completely remodeled, brand new roof, brand new HVAC. So it doesn't need any work. She understands if she, we told her, go put an ad out right now and go find her tenant. Because once she finds that tenant, it's going to cover her mortgage. It's going to cover this payment. It's going to leave her about $400 or $500 a month in positive cash flow that she can use to pay down that second loan, or utilize that as a way to go buy another rental property. So she is thrilled. We helped her. We kind of in a way are changing her financial future, and the math is about the same.
Yeah. Hey, and Jason, one other point too, guys. These are opportunities that come at us on a daily basis, and the key factor here is the loan to value. In most cases, Jason, we're seeing 50% loan to value and less, correct?
That's absolutely correct.
So
we're doing that as a way to protect our lender.
That's awesome, you guys. Good job in showing her the light.
So it's purely based on equity. Equity. Put your blinders on here, because most of our transactions are seller carry finance that come with their bag of approval processes. These people are borrowing against their equity, and they have sufficient equity in order to do so with a valid story behind it at the end of the day. So just want to preface that as if you've bought a note from us or have entertained doing so, it's a little bit different strategy, obviously with the differences in collateral of personal property unit to residential, but it is an equity-based loan, below 50% loan to value. That's a bank quality position, at the end of the day, and that's really tough to come by. Also, what's really attractive, I think, even for maybe some of our newer investors as well, is these are like what, 20 to 50,000 bucks. Most of our lien positions are like 60 to 100. So you can start really diversifying across multiple collateral, and upwards of $250,000. We just talked about 40 and 120. That's 200,000 bucks, where you get first and second lien positions through hypothecation, where we pledge those positions towards your collateral. So if for whatever reason, us as investors, our group, highly intelligent and deeply connected throughout the nation in these major markets, you end up picking up that position, at our fault, of 50% loan to value. So what's the downside in those positions? Well, you end up stepping into equity day one. If worse were come to worse, say the borrower borrowing on their home via equity goes non-performing, and so do we, ultimately you still have a position, and that's important to understand at the end of the day. So, communication is of utmost importance. In seconds, that's of conversation. But to know how we're entering into these deals is extremely important. We're not just a lender. We came in to buy these properties and saw an opportunity to backdoor almost an acquisition, and still, get plenty of yield at the end of the day. Listen, creating a position at 18% is not a bad day by any means. So that provides us ample skin in the game, but also below 50% loan to value, and you get a double-digit interest rate and start cash flowing in 30 days.
So, as we do that, Jason and Todd, we'll get that information, and we'll put a marketing piece out that we'll send out to our investor group list, specifically on these second lien positions. So if we can get this information from you today, we should be able to have it out by first thing tomorrow morning, so that they can get all the specific details of each one of the deals and the breakdown of what the offering is and everything like that. But I think we're definitely going to start getting some traction because investors are looking for the specific lien situation that they don't get from our manufactured homes and parks. So I think that there's a certain amount of investors that would probably want to participate in something like this.
What do you think an investor would have to replicate to find deals like this on their own?
Hello, Todd. How long have we been doing this?
Yeah, we've been at this for 25 plus years. And guys, between our two networks, I mean, we've got deals coming to us on a daily basis. I mean, these are opportunities. Like Alden said, our primary objective, initially as an investor is to buy the property. But now we've got a funnel to help people create win-win scenarios. And worst case scenario, we get the property. Those are properties we want to rehab and flip retail. So by partnering up, I think it's a tremendous opportunity for any note investor who's maybe not familiar with rehabbing or who hasn't been in the business. You can leverage that experience, that knowledge to even have further opportunities. With a 50% loan to value, we create that buffer so we've got plenty of room for the rehab. If we have to take the deal down, Alden, those are additional opportunities for the note investor to come in for the construction loans.
So, multifaceted for sure. Go ahead.
Yeah, that's really key. I mean, it's kind of like, number one, we're helping people create win-win scenarios. But the reality is, guys, unfortunately, there's always going to be a small percentage that no matter what they do, we're going to end up with the asset. And those are really going to be home run opportunities that is going to generate even more opportunities for us and our partners.
Who's sharing their screen right now?
I am. I can stop.
Do we have any other kind of paint over? I think we were talking about those four, right? Oh, we got a couple other people joined here. Appreciate you joining here. But, obviously to hitch your cart right now with highly intelligent and efficient operators is more important than ever. With struggles in long-term rental strategies, hardships in fluctuating interest rates for multifamily, you're seeing huge fad in storage, but not a lot of people are getting their proposed return. At the end of the day, it's great to try and seek a 20% return on investment over a 3 to 5 year period, but that's speculative at the end of the day on, markets, contingent on fluctuations in interest rates, as well as, market contingent, where here in these opportunities, we receive stability and contractually agreed upon returns in a double-digit interest rate. I know about 2 or 3 of our larger investors that unfortunately over the past 5 years invested in multifamily complexes, and they're losing in probably 50% of them, which is a challenge. It's a challenge to try and climb back from a loss like that, especially when you're talking about upwards of $1 million. Losing $500,000 in the want for higher return on investment is a challenge. And I think a lot of people are uncertain. A lot of people have money liquid in their accounts. I talked to multiple of my investors that have upwards of $250,000 they're sitting on, and they're just unsure. Having $250,000 liquid in your account does nobody good, and you're losing to inflation at the end of the day. So, pivot your idea here, because there's strategies that ultimately provide wealth preservation currently out in the market, and you don't know about them. Why? Because you haven't done the research into notes, into private lending, and it's manufactured that way for people not to understand these programs and to be told by their financial advisor that that's risky. At the end of the day, to find an opportunity like this in a and now being a better time more than ever, given all of the bloodshed and other traditional real estate investment strategies. I mean, to me, this just seems like almost a once in a lifetime opportunity. And that's why we're even sitting here today on our mastermind, inviting our investors out. We got a couple of our VAs here today. Ultimately, to grow the opportunity, we're providing you backdoor availability of literally golden nugget programs, providing you to hit your cart with another qualified entity, with hundreds of doors and transaction, niche market expertise and seller finance notes, long-term real estate investment strategy expertise. James, what would you have to say about what we're doing here?
Yeah, I think that, again, this is a unique time and unique opportunities of deal flow opportunities. Getting your lien position as an investor, we always want to make sure that at number one, we have a lien position. Number two, there's equity in the deal, so we're not over leveraged specifically inside the deal. So those are some really important things that we want to follow about, because that's what makes sense for the investor and the sense for us. As Alden's pulling up our mobile mailbox money site, you can feel free to always log in, create an account with our site. It's very simple. View the notes that are available. These notes that these guys are talking about, we're going to post these notes either tonight or first thing tomorrow and then send them out in the email. But here's some sample of actual notes that we have available out of our office here in Arizona. And we can walk through a couple of those briefly, but we're still looking for some investors on. Actually, we've got a new principal and interest note that's coming up at lot 69 that looks like it's closing this month. So that first one is going to convert to a 15, I believe a 15% 20-year note. The very first deal available, lot 69, that's going to get changed up today because we've just got a buyer approved on that specific property. 1736 right next to it. That property is turnkey rehab complete. It's listed for sale with owner financing. Chances are somebody's going to need owner financing. We're looking for somebody to help pick that one up. Lot 32 Sierra State, same thing. That property's been rehab complete. I'm actually meeting with a potential buyer today at 1:30 on that specific property to negotiate, and we'll be looking for financing. Lot 310 right next to it just sold yesterday. So that was forward. Second lien availability. Every once in a while, we'll come across second liens. We've got a home with land that's worth about $450,000. The first lien is $250, and we're looking for about $50,000, which would be $300,000 all in on a $450,000 note, which is probably, I think, about 70% of value. I have to pull a calculator.
And that's a 3% mortgage there.
Yeah. So 300 divided by 450. It's 67% of value. That's a great deal. Great property rents for about $3,000 a month, all in. We've got our summer specials. We have a couple summer specials left. I think that lot 35 just sold yesterday or today. Off the list. Lot 347 is an interest-only note that we're looking for. That's paying, we'd have to open it, but it's got a great return on it. Another summer special, lot 109, is an interest-only note. So we do have a couple interest-only notes. And the next one, my screen is not showing it. Those are some of the old Florida notes that we were showing. So we're going to change these older Florida notes that we have up there and update them with the new notes that we have, because those have cycled out. So watch that site, Mobile Mailbox Money. Look for the emails. If you're an investor, make sure you're logged in to the site, mobilemailboxmoney.com. And you can always log into the site. We'll continually update that. That inventory is pretty much the live feed. It should update at least every 24 hours. So we've had some action and some change. We'll have new Florida deals on there. We've got some that sold. So those will get updated today as being sold, and we'll get the new ones on there. We've got a host of team of people that are actually working behind the scenes with us now to help get this information out on LinkedIn and on Facebook and all over the place. So we're growing and we're excited about it. We think that there's great opportunity. but we look for value-based deals, and value-based deals are not always easy to find. You know, we do have a lot of other investors that come to us that are on the MLS agents and so forth that are like, hey, it's just a soft market. It's slow. We're not doing much of anything. Well, the crazy part with us at Win Mobile Homes and Mobile Mailbox Money, we've done more deals year over year last June in comparison to this June and July, and now coming in August. We're doing more deals than what we've ever done before. So we're excited about it. We're excited about giving our investors the returns that we're looking for. We just paid off, I think Alden mentioned, maybe 3 investor payoffs that happened just in the last week. So investors are getting paid off, they're getting their payments. And, you know, the most excited or happy investor is the investor that just got paid off so that they can go and redeploy that capital and put more money to work. So we're excited about that. And we think that there's great opportunity, and we want to offer that opportunity into the Florida market. We've had extensive talks with Jason and Todd about their business model. And it's not a model that we actually do right now out of Arizona. We're in 2 different types of markets, but they're both very dynamic. Obviously, Florida is a very dynamic market, has dynamic pricing, but there's always opportunities in the distress market when people get into a distress situation. So we've looked at this, and ultimately, I think that this will be a great benefit to the fund that we have, Silvercrest Opportunity Fund. And the fund, we're going to do a new capital raise on the fund of $10 million, $10 million. So we'll put that together, and it'll be specifically for second lane investments with low debt to equity. And we'll probably mark it out there that there'll be on average of no more than, the goal is to be no more than 60% of current market value on the property. And we'll have a specific raise. Alden could talk about what the return on that raise is, but that's silvercrestopportunityfund.com, which will be a next step. That should be up, I would say, by middle of next week.
So whether you have 50, 100, $1 million, $5 million, you're accredited or non-accredited. In a non-accredited strategy, we could take one investor on one note and you start stacking cash flowing assets. Well, today is brought to you by Silvercrest Opportunity Fund. In addition, we have our 506C Reg D 506C 3C1 fund immediately raising, with our deal disclosures being formulated as we speak, providing a capital investor who's accredited a 10% net return for terms as low as 1 year or 12% net for 3. And that's monthly payments. In the 1-year term, we're talking about doing a quarterly payment in the 3-year. But that provides what? A per unit owner share in the portfolio of notes as we take them down. So as our evergreen fund provides us the availability to do, what does that mean? That means that if you send us $200,000, we can help you start cash flowing in 30 days, and you become a per unit owner share guaranteed by the fund. Right? So defined a set it and forget it program in bank quality positions with high equity upside and low loan to value, providing a double-digit interest rate, 10 and 12% accredited in the fund. Investment seeking currently today. So if you're watching and you're accredited and have, $50,000 is the minimum, okay, upwards of $1 million, we could help you start performing in as little as 30 days. Just so you all are aware, we're evolving in the industry to raising private capital and leveraging artificial intelligence. And I've talked to multiple people about their different strategies on what they've done to implement increase efficiency, automation, down to having almost like a lifelike avatar on the phone to draw from your Zoom database. So we've been recording Zooms for upwards of 2 years, have hundreds of Zooms, and we'll be rolling that out. So I'm just updating y'all on the next edge, next gen, and we're here to evolve. If you're not implementing artificial intelligence, you're being left behind. So for us, we're diving head over heels here with our VAs on today, but also with artificial intelligence on all kinds of different applications. So, you know, you guys watching here today and watching our development gives you back office view of our strategies and things of that nature. I think in the next year, we're going to be leaps and bounds of where we are right now. What kind of business are we doing right now? We're doing $300,000 to $500,000 in first lien performing debt on manufactured housing, and with our new partners, Jason and Todd, we could scale that to $5 to $10 million a year. So we're currently looking for lawyers, doctors, dentists, the guy that owns the contracting company, the guy that owns the roofing company, busy W-2 high income earning specialists out in the industry that want smashing returns in low risk investment strategies in a time when it's needed most. I bring up AI. If you haven't seen lately, we've been posting a lot of videos and marketing content. I'm just going to share my screen right here and we'll show you guys one of the videos that we made this morning. This took me about 2 hours, but you'll see these hopefully flying on the Megatron at Cardinal Stadium soon. No, I'm just kidding. But we're doing big marketing in all of these avenues. So check this out. Oops.
Dad, why are you never around?
It's my job, son. The rental problems, it's a lot. Sometimes it feels like I'm working for everyone but my family. That's when I realized I need to become the bank. So with this, there's no toilets, no tenants, no midnight calls. You're managing time instead of properties. Wow. We do this by being the bank in collateralized lending, buying, seller, finance styles. So that you have the opportunity to make money from your money instead of your time by becoming the bank. Are you ready to take control of your financial future and create lasting financial freedom? With mobile mailbox money, you can. We help business owners like you buy back their time and create more freedom in their lives.
Take control of your financial future. It's time to start your journey to financial independence today.
So just an example of the stuff that we're putting out, trying to pull the heartstrings. You know, we're really oriented on our strategy towards what we're wanting to facilitate and what kind of life we're wanting to live at the end of the day. And if we can do that and spend more time with our family, our loved ones, maybe travel, live on the beach, you know, these are all available opportunities to you today to change your life and start altering your strategy, becoming the bank. They don't want you to know about this because they want you steady working your W-2 or whatever it may be. We would love to help you exit your long-time employment or, you know, just start living the life that you've always dreamed of. So we appreciate you all being here today. Does anyone have any questions? Burning,
You know, just one last thing just to note, because we're really expanding our opportunity, and Sean Gibson happens to be here on the Zoom, and I was just telling Todd and Jason that there's like I'm gonna call it a 95% chance Sean's gonna be flying and gonna be up in Dubai of all places, which will be really interesting. We'll want to get an update once he flies up there and probably have him on the Zoom and find out how's it going, what's going on. I'm just envisioning it. It's been a vision to try to get somebody, a relationship built out of the UAE, which there's super high wealth. So I don't know if Sean, if you're watching this right now, or if you just have the screen up, but we're very excited. And I think that it's a great opportunity. I don't know if you want to put in 2 cents in regards to that. Maybe he stepped away, but we're pretty excited about it. You know,
Hey, I'm here. I'm here.
there it goes.
Can you hear me?
So you ready to move?
Okay, yeah. So
Ready to move to Dubai in like October?
I think so. Yeah, I'm super excited for the opportunity. Obviously, there's a ton of capital out there, and I think in our investment strategy world, there's something that I've never seen before as far as manufactured housing, affordable housing. I'm sure I'm getting pitched crypto and everything like that. But this is a tremendous opportunity, so I'm super excited, especially with our team and our processes. So yeah, super excited.
I think, you know, if we get any traction at all, I think it'll be massive, you know, capital opportunity of putting that capital to work in the right place. it'll probably be much higher capital, larger dollar amounts, which I think we have a big enough team to evolve into something like that. So we're pretty excited about it. I just wanted to just kind of mention it because as we talk about it and we believe it, we discuss it, it becomes fruition and it actually happens in comparison to keeping it on the low down. So we're excited about that. There's a lot of great things that we have going on. Obviously, Alden has done an amazing job on the video production. I've got some of my investors even calling me, asking me how that's being done and so forth. And it's just taken us to a whole different level. So we're pretty excited about that and the support that we have, including Sunny down in Florida, has gotten us super detailed in regards to helping us roll out these notes on a professional manner and help coach the specific potential new investors and walk them slowly through each one of the documentation and for them to know the value and the opportunity and make sure they get all their documentation correct. Sean can help out also. He does that also. But we're going to be hopefully moving him into a newer, bigger role on an international level, which is kind of exciting and, a little bit scary, I'm sure, for him in general. But, sometimes you just got to take the chance while the opportunity is there. And this country, obviously the market is really kind of strange trying to figure out the right niche of what's going on. And it's definitely an opportunity for us to take right now. So we're excited about it. It's coming on 1:00 right now. Alden, you want to kind of settle us up?
I think the objective is to figure out how to make money in both up and down markets. So if we can figure out how to do that, it's called mutual prosperity. We appreciate you guys viewing today. Today's brought to you by Silvercrest Opportunity Fund. Invest accredited and earn a 10% net return for terms as low as 1 year in an income-oriented investment strategy, investing in affordable housing. We appreciate you guys being here. Go back and view the previous blogs, the podcasts, the masterminds, view the data, view what supports us actually performing and outperforming traditional real estate investment strategies. If you don't see stuff you like on our website, see a couple of new few faces, call us or chat us in the chat box on mobilemailboxmoney.com, or you can call direct. We've got immediate sales staff waiting for your capital investment at 602-888-CASH. That's what we call mobile mailbox money. Appreciate it, guys. Have a great day.
Have a great day.